Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry and today is Tuesday, February 18 and the time is around 4 a.m. GMT. So we are updating the chart of the euro dollars. This is a 60 minutes chart. We can see right here. We are now this rally here to 1.11 ended with 2. Since then we have declined, and the decline can be labeled as an impulse. We have 1, 2 here, and then we have 3, we have 4, and then now finishing up with 5. Okay, so there is enough number of swing to end the wave 5. Now in fact we don't necessarily have to keep going down here in the very short term, and we draw this trend line here is also to give us an idea if and whether the 5 waves down is finished. If the pair can start to break above it, that could signals that this cycle is finished, and therefore the 5 waves can be finished, and we should be looking for a bounce if that happens. Alright, so let me double check here. This low here is 1.0818, and this one is 1.0821. So this is the last low here, and this could have been your wave 5. Alright, especially if we start breaking, then that's it. We should be ending this 5 wave down and then starting to tune the 3's correction in the form of the wave 4 here. Okay, then as far as we stay below 111, then we can still see further downside again in the pair. Okay, to the downside. So overall, with the right side down, the momentum still remains bearish in the euro, and therefore any rally is still gonna struggle, especially in the first time it rallies in 3 waves. Typically it's gonna struggle and find sellers again, form a new low, or at least a 3 pullback, right? So with this right side down, the bias again is to the downside, so not really a good idea. Let's say if someone were to pick, trying to pick the lows in the euro dollars at this stage. Now looking at the higher degree, if I look at the daily, now the picture is a little bit not as clear in the daily. We can kind of there is no label here, okay, but we want to look at it from the higher perspective, what we are looking at here. Now if we take a look at the euro here, we form a major low in January 2017, and then we topped out in February 2018, right? So this is a 1 year kind of move. Now in a glance, this one does look like a 5 waves. You can label it as a 5 waves. So depending on now, if this is a 5 waves, right, you can call this, if you understand Elliott Wave, you can either call this ending with 1, or you can call this ending with A, right? Or you can call this ending with C if it is a flat. Now if you want to call it a flat, let's say, you can do it from here. Let's say you can call this ABC as a flat. So you have a expanded flat, you have A, B, C. Now if you call it a flat, that means the euro potentially in the long term, I'm talking about the long term, can even break below 1.03 again. Okay, so that will be sort of the bearish count. The bullish count, that means this 5 is up here is not with C of a flat. This is either ending with 1 or with A. So I guess you can see at this stage we got 3 different possibilities in the euro dollars if we are talking about the larger degree. So there are 2 possible bullish count, 1 possible bearish count that can break below 1.03. Now a couple of other things here, observation, just general observation. Okay, now the euro has been kind of very choppy in the past, let's say since 2018. It has not been easy, okay, for the euro traders, because even though the sort of the bias still remains lower, but it is a very tight range and it's very choppy. The move down is not really smooth. It has a lot of correction and a bounce in between. And also we can notice here, this rally took a year, and this one from 2018, from where we are, February 2020, this currently takes 2 years. So this move here, which is a bigger range than this move, uh, took one half of the time of this move. Now, if you just look at it from that perspective, you really need to be giving yourself an option to see that maybe, in fact, this is the one that is stronger than this one, and this one, therefore, even though, yeah, we do make new low, may not necessarily be uh, really bearish. That is eventually gonna break below here, because, like I said, this one looks like a 5 waves. It took only 1 year. This one, you can see, it's not really an impulse. You can see how choppy it is. Look at this, how choppy it is. Okay, it's not really definition of an impulse, and it looks very choppy, and I would say you can even call it corrective because of how choppy and overlapping it is. So impulsive can be labeled as corrective, and took twice the amount of time that it took this this rally here. Okay, so again, that means it is actually possible that as long as we stay above here, eventually we might even start to extend higher again at some point, if this is with 1 or with 8. The only way euro keep going down, break, is if this 5 waves is with C of a flat from here, A, B, C. All right, so I hope that that is helpful, okay, in terms of understanding the probability here. And now going back to the shorter cycle only, okay, we'll just be focusing on the shorter cycle, and this is the longer term for your information. The shorter cycle, simple, right? Shorter cycle, the momentum still remains sort of to the downside, right side down. So as long as the pound stays below 111, we still can see another leg lower in the shorter cycle. You have a clear invalidation. The longer cycle, that's why I want to talk about the longer cycle. There is a possibility if we can hold above here, we might reverse, because this one looks like a 5 ways, right? So having said that, if you focus on the shorter cycle, you remember that even though we could see another leg lower as far as 111 holds, but you got to understand that the larger cycle also has the possibility that once this what looks like a corrective structure finish, we possibly could turn, right? We possibly could turn violently, another 5 ways up to the upside. Okay, but of course, like I said, those are some possibilities we have to keep in mind. And there is also a possibility that this C wave is a flat. Like I said, if it is, then then we can eventually break below 1.03. But if that is really in the path we're gonna be in right now, again, the question we need to ask is, okay, then this decline so far is not really very inspiring to the down. I mean, it's not really impulsive enough that we could be very sure, very certain that this is going to be the right trend that is going to break below the 1.03. Okay, so I think the larger degree in the euro still remains a little bit unclear. I mean, I could see possibly both ways, but I can certainly also see how the pair can turn higher if we stay above 1.03. But in the shorter cycle, if we just go with the momentum, then we can just conclude that because the momentum has been firmly to the downside, any short-term bounce is going to find sellers at this point in time in 3711 swing. Okay, as far as we stay below 111 here. All right, so I'll see you all again tomorrow. We do have a 14 days free trial. I'll provide the link in the description below, so you can check us out. Also join one of our live trading room to learn more in which we do this kind of analysis every day in all the pairs that we cover. Okay, so see you all again tomorrow. Have a nice day, everyone.